Hey everybody, welcome in. It is Sunday Q&A time. I just want to wish our friend Pilot in the audience there a good recovery from surgery. Let's jump into the story today. We're going to be talking about everything regarding trading, timing, time in the market, robots, perps, spots, real estate, how to measure Bitcoin, and so much more. Big thank you to Sean D, T&D, K8, everybody else out there. Hope you're all having a good day. Let's make it happen. Hey, Forrest. And this is not financial advice. I'm just a guy on the internet. Let me know if I forgot to check my mic. Yeah. I think I should be working. And all the questions come from Patreon. A big thank you to everybody on Patreon, too. First question is from Down Under in Australia. Hey, good day, James. I am heavily exposed to Tesla and Sol, making up for 89% of my total portfolio, which I'm very grateful for as I purchased both assets at a low cost basis. My question is, I have 1% exposure to Bitcoin as I wanted to jump on the faster horses. At Bitcoin current prices, would you DCA to gain a larger position or wait to rotate out of Sol into Bitcoin further into the bull market? Thank you for everything you do. You're a legend in our household. That's awesome. Hello, household. Bookhorn, thank you. Now, this one I'm going to answer the way I look at all investments. And what you see next may be shocking, but remember, I sandbag all my projections, everybody. So take this with a grain of salt, but it's how I actually view things. So what I did, I put together my current as of September 2025, which ends in 2 days, by the way. I'm very excited for September to end because you know why? Because Q4 rocks, at least if history repeats. And barring any black swans. Of course, speaking of black swans, there is a 1% chance of a total collapse of Bitcoin. That means Bitcoin price will go to zero. Okay. Obviously, it's not going to happen in this a flash of a second. So you might be able to sell during the dump, but sometimes the risk does happen very fast. Then the bearish floor for me is $70,000. I've talked about this over the last 10 months because that's the floor typically for Bitcoin at the election. And that the night before the election, the Bitcoin price was $70,000. That was November 5th, 2024. Okay, so you take the bearish floor probability, 30%, multiply it by 70K, you get 21 grand. 1% times zero is zero. Now, my base model, okay, modest growth, 40% chance, we go back to 120K. We've been to 125. That's not very exciting, is it? But anyway, 40% of 120K is 48K. And then bullish rally, you go to 150K. I assign a 20% probability of that, which adds another 30K to the kitty, and 9% chance of what I call the Super Bowl, the moonshot, supply crunch, people FOMO in, a nation state buys, we get a strategic Bitcoin reserve. Any of those scenarios, we go to 200K. But there's only a 9% chance of that for me. This is in the year 2025. I'm not talking 2026. I'm talking over the next 3 months. I believe the expected value of all these scenarios is 117K. Even you could eliminate the 1% chance if you want. Same thing, 117K. The price now, Bitcoin's just gone up $1,000 over the last 24 hours. We're at 110,356. So you could make another 6% on your bag of buying Bitcoin right now. And for me, that's not enough to get out of bed. And again, my goals are not your goals. Remember that, everybody. So buying Bitcoin here at 110K, I personally would not. And you know what I do buy instead. So that's where we are. And I don't want that to disappoint people. Whenever I say, oh, we're not going to $1 million in the next 12 weeks, people lose their minds. They say, oh, you're so bearish. No, I'm realistic. And remember as well, I sandbag because I don't want people coming back to me saying, you said the price was going to do this, because that drives people crazy. So I'd rather err on the side of being under than over. Okay. My reasoning is here. That's the way I approach every asset. I create my little EV tables. I do it for Tesla. I do it for Solana. I do it for all these other assets. And you should also have that same discipline to understand the downside and the upside and the relative odds of each. It's a very simple exercise, but I guarantee you, when you sit down and do it with pen and paper and you have your reasoning, your rationale, it can be very sombering sometimes. And it'll help you make better decisions in the market. So hope that helps. The next question is from Big D6. Thank you, James, for all you do and the team do for the community. I have heard you talk about melting fiat becoming worthless, but we describe the worth of Bitcoin in USD. We'll eventually label the value of Bitcoin something else, or does the rapid deflation of the dollar reflect in the value we perceive a Bitcoin to be worth? So basically, as Jeff Booth would say, you can't measure, what is it he says? You can't measure the system from within the system. You got to be outside, and one Bitcoin will always be one Bitcoin. So Bitcoin, the best way to measure it is with Bitcoin. But what I actually like to do, which is very crude, I've been doing this for years, is use real estate as a proxy for valuation. So this is and you can create this for your average US home price in Australia, which actually, if you're in Sydney, it's kind of bonkers. But I take the average US home price in the United States, about $420,000. You can see the seasonality here. Every year, homes spike in June and they crash in December. They spike in June, they crash in December. But the overall trend is always up. The US home price is denominated in dollars. Therefore, it's a good proxy. You got a piece of something hard like real estate, and it's tied to dollars. So what I do is I take this and turn it into a Bitcoin chart. I'm going to turn off my camera so you can see this. And basically, I go back to 2014 and calculate the number of Bitcoin that would cost to buy an average American home. So back in December 2013, that was 3,500 Bitcoin. Then, literally within months, by January 2014, it was 173 Bitcoin. So we go for 3,500 to 173 Bitcoin in just a matter of weeks. Then it goes back to 1,000 Bitcoin, 2015, which is the bear market. So remember, this is the price of a house divided by the price of Bitcoin. A simple pair chart. Everything's a pair. Remember that. Then in, 2017, we go to 125 Bitcoin. And then that should be 75 Bitcoin. And that should be, there's a number missing. It should be 146.5 Bitcoin, not the 46.5. The one has got cut off somehow. Then we go all the way to 5.4 Bitcoin, then 21.5 Bitcoin. And currently, an American house is 3.8 Bitcoin, give or take a few dollars. That's 420K divided by $110,000 live. Basically, a house has never been cheaper in Bitcoin terms. So this is how I like to look at the value of Bitcoin. And obviously, if you're holding real estate as your primary asset and not Bitcoin, it's a problem. But if you got a mixed bag of both, it's good because everybody needs a castle. Thank you once again, Sean D, and everybody for being here. I hope that helps. Next question. And this is from Tesla Hodl. Are you concerned about a potential government shutdown delaying the SOL ETF approval and perhaps hitting the market negatively? It's coming October 1st. I picked up UPXI calls recently, given the many converging catalysts on Solana, rate cuts, ETF approval, seeker funds, shipping, historical all-season timing. Best to you. No, I'm not. Again, I'm a student of history, never studied history in university, but I am obsessed with history. But I believe government shutdowns are always a nothing burger, always dramatic, and no. All the analysts you see, they are all revising their S1 filings for the Solana ETF to include staking, and many believe they could be literally a couple of weeks away or less. October could be huge, and there will be 11 more of them on top of the existing 12. And people say, but what about the ones in Europe and Brazil and Canada and stuff? Well, they take in very small flows, so I don't really count them for now, but hopefully they'll become big real soon. Anyway, the government shutdown, don't sweat it. It does bring about a bit of volatility, but I don't think it's going to delay any Solana ETFs. Next question is from Jared T. Hi, James. I have a friend who doesn't believe in technical analysis. He thinks the market only operates on sentiment and fundamentals. I've tried explaining that you need all three to get the best ROI. He then tells me to prove it by challenging me to a trading competition starting January 1st with a $10,000 account. The winner is determined by whoever has the bigger account balance at the end of the year. Can I play in that competition too? That'd be fun. My question is, which tools and strategies would you use to ensure victory? Well, this is such a great question. And I will take a second actually talking about a few other items before we get into the actual tools, because this is so important. And I wouldn't be standing here, I wouldn't be where I am if it was not for TA, okay? TA has made me. Started with cover calls in the 90s. The way I made money in cover calls is purely on technical analysis. So the way I look at the world, I've shared this before, fundamental analysis is to decide what you should trade, and TA is decide when, i.e. when you exit, when you enter, when you hedge, when you take profit, when you layer in, when you layer out, etc. And I've spent the last 35 years thinking about TA, building TA models. I had to build very crude ones in the 90s, but now I have the money to afford a team to make the best models and the most unique models on the planet, which is gives me great pleasure because I use them myself. And I would be blind without them. But I do want to talk about some data first, just for your friend, okay? If they are trading without TA, they are not going to be very successful, okay? Yes, you might be able to pick the right stock, but your timing will be off, okay? Very important. And there was a survey of like 700 investing professionals. 87% of them use TA. And of those 87%, they outperform the others that don't. So without TA, traders lack things like timing tools, suboptimal performance, and there are tons of studies, like 50 studies out there that you can find. But the beauty of TA, it helps you identify all the key stuff you need to know. Support and resistance levels, when things are overbought, when things are oversold. It also encapsulates market psychology and market inefficiencies. For years, I traded options identifying market inefficiencies because the prices were off. And you think markets are always efficient? No, they're not. For example, I also like to play in the most hated assets. That's a classic example of market inefficiency. You know, people saying, oh, Tesla's a car company. They don't know what's going to hit them over the head. And that is also beautiful. And TA exploits these by signaling when sentiment shifts. And this allows traders to enter and exit positions strategically. Without TA, I'd be living on the street in a cardboard box, or I'd be a wage slave. And that's a simple fact of life. And I have to say that again, I'll repeat. FA, fundamental analysis, is to pick which are the best assets to be in. And TA is how you time, how you trade, how you position, how you build bags, etc. So much more there that we could talk about. So if I was you and you wanted to win this competition, and if you want tips, you know what to do, you know what to follow. But I'd use IDSS for the 4 to 6 week swing trading on the 4-hour chart. Use all things, the optimized trend, the trend model. Make sure you turn on the back tests on the trend model, the confluence model, and the mean reversion. When you get all those 3 or 4 models all saying the same thing at the same time, you are golden, okay? You're going to win 95% of the time. That is the magic of this TA that we have built. And pair trading on steroids, if you want really to kick your friend's butt on the 5-minute for very volatile inverse correlated assets, I could go Sol 3x long versus 3x short. Angle Blackson, thank you for coming. So that's it. Anybody who says TA is BS, TA is astrology, yeah, there are probably some people out there who claim themselves as TA experts and they are astrologists. But if you're a professional trader, you know that 87% of all pros use TA. That's it. Or they have a team working for them that use TA and tell them what to do. Crypto T. I've been following you since you first started back in 2020. It was nearly 5 years. It's mad. I'm 65, recently retired. Woohoo. I'm living in beautiful Northern California, not too far from you. Your videos inspired me to take control of my 401k, so I moved on from my financial advisor and went all in on Tesla, Solana, Bitcoin, and MicroStrategy. My family and I thank you for giving me the confidence to take that decision. You and Cern have shown us the path for Tesla to hit $8,000 in the next several years. I do believe Tesla will need to do stock splits between now and then to keep the share price attractive for retail investors. You know your stuff. That's exactly why share splits happen, especially to incentivize employees in the company. Could you share your best estimates on how many splits you might see along the way? Well, this is something that I've had for a long time. Yes, I sure can. And it's pretty crude. Let's go look at some history. For people who weren't in Tesla in August 31st, 2020, that's when the price literally 10x in a very short window of time. Went from $200 to $2,200. Boom! Like a straight vertical rocket ship up. Mad. And then again, literally just 2 years later, we did a 3-for-1. So it was a 5-for-1 first and a 3-for-1 second. If you had bought a leap at the beginning of 2020 for peanuts, imagine you spend 10 grand on a leap, okay? The one leap is 100 shares. All of a sudden, after August 31st, 2020, you now have 500 shares for that leap. And it may not have even finished yet. You may still have it for August 2022, because typically I buy the December leaps. Then you get another 3-for-1. So your 500 shares becomes 1,500 shares. And when you trade leaps on stock splits, literally it is very powerful, extremely powerful in terms of returns and ROIs. In fact, I could show you some of the ROIs I've done in 2017, 2019, and 2020. They would melt your faces and maybe cause some depression. But that's what you need to do. That's the beauty of leaps. Now, it's hard to believe when you look at this. There's two things you can see from this. One, the price was pretty high, the 5-for-1, but that's because it went up so fast during C19. Normally, a stock will do it at maybe $1,000, $1,200, $900. But the other thing you notice is they always do it in August. Timing is interesting. We've passed this August, so the next opportunity is probably August next year or August 2027. So here I am putting my line in the sand, my exact estimate of when they will do the next stock split. The price of the stock will be $900 to $1,200. If it is $900 and we get there August 2026 or sometime in 2027, they'll do a 3-for-1 at $900, taking the price back down to $300. If the price shoots to $1,200, they'll do a 4-for-1, again taking the price down to $300. It's not hard to predict this. I've been doing stock splits with options on companies for years and years. And even, by the way, this is kind of wild. Even if a company notifies you of say a 10-for-1 or 20-for-1 stock split, some of the really wild ones, at that time of notification, it's worth jumping on a leap just in case, just to get a piece of that exposure. And it makes the leap very, very cheap afterwards. You basically pay nothing for it. So thank you so much for that great question. And congratulations on your retirement. Your job now, your main job is to stay healthy, because your bags are going to be just fine. Mark P. So Tesla, a lot of Tesla questions this week. And I love that people are now realizing what it was. I've been talking about Tesla for 5 years and people would groan. Now everybody wants to know all about it. Yes. Mark P. Tesla is on an 8x mission. Yes. 8x the price. And I'll say again, I did a video yesterday on AI and the size of the market and how it grows the pie. Of course, nobody watched it because nobody is interested in AI. But you should be very interested in AI. AI is the biggest thing to ever hit this planet, my friends. Learn about it, embrace it, or die. It's that simple. And I'll pound my fists on the table till I'm out of breath on that particular note. Okay, so that will no doubt take a lot of resources from suppliers that will also need to 8x or more as well. What are the, say, top 5 companies that would benefit from this growth, such as semiconductors, actuators, sensors? You are on the money. Are there any diamonds in the rough? Found you late last year and subscribed earlier this year. One trade in the first month has covered the subs for a few years. Awesome. Thank you for that. Let's talk about a couple of things. First of all, I do believe, and I don't own any of these companies, by the way, because they're all too expensive for my liking right now. So not financial advice, but if any of them do take a dip, I will be there with my layers. I got all my trading view alerts on and everything else. But first of all, Samsung will be building the AI6 chip. That's a very good play. They're going to have a huge contract with Tesla on that. TSMC are building the AI5 chip. They're going to do very well as other stuff they're doing around the world. But TSMC is exposed to Taiwan. And if China decide to invade, that could be very ugly. I am hoping smarter minds will prevail. All I want is peace in the world all the time. Third player is LG. LG is like LG, the guys that make the refrigerators. Yeah, those guys. What's interesting about LG is they do supply chain stuff for them. Battery electronics, actuators, it could be other sensors for Optimus on the fingertips. and they are part of the allegedly supply chain. I don't have access to the exactly what's going on inside the Optimus supply chain. I know that Tesla's very vertically integrated and they build their own stuff. They build their own chairs for the cars. But I do believe LG is in there somewhere. And no, Tesla cannot do it all if they're supposed to build, 10 million bots in a few years. Also, there's a couple of other players here. Zhejiang, Senhua, they do intelligent controls. Remember, controls are everything. Actuators, thermal management, maybe even cooling systems. They are apparently a supplier, and there's at least, I can't remember the exact numbers, 28 or 30 actuators per hand, or definitely per bot. Anyway, each one, they'll be getting a lot of business if they have the contract. Allegedly, they do. But each unit that they sell could add at least 10,000 yuan in value to the corporation. Zhejiang. That's not available. It's not trading on American stock exchanges, unfortunately, but you can trade it on the Shanghai Stock Exchange. And another one is Ningbo, Tuopo. They do actuators and electric drive systems as well that could be used in the joints like the hips and the legs and the knees of the Optimus as well. They would be the 5 players that I would look at. I'm hoping Samsung will take a dip. TSMC is a little too risky for me and fairly valued, but LG, I don't think so, because I don't think the business they make on the Optimus spot is enough to move the needle. But for these 2 smaller companies, Ningbo and Zhejiang, yes, definitely big, if they are there. I've heard rumors they are, but I cannot verify that. So great question. I like the way you're thinking ahead. Jordan's Films. It seems like all anyone talks about now is perp trading with leverage instead of buying spot because of the higher potential gains. If most new retail coming into the market chooses perps over spot, unlike in the previous cycles, could that actually stop us from getting kind of crazy all season we're all hoping for? Well, this is a super interesting thing, and I track this a lot, and I trade perps myself. I'm an options trader, and therefore I naturally gravitate towards perps as well. I do enjoy it. It's a fun sport. But let's talk about exactly what's happening and then answer your question in a second. First of all, total DEX perp volume has exploded. Everybody wants to build a perp DEX now. We saw CZ from Binance building Aster a week or so ago, launching it. Apparently, they want to go after the Hype business, but Hype is still crushing it. Yes, Aster had a flash in the pan, but if you start using Aster, you'll discover the user experience is horrible. Nothing like Hype, nothing like Jupe. It's just, it's, if you need to do split second trades, you need to move liquidity around fast, it's not exactly perfect. But the total DEX perp volume basically is doubling every year. I don't have the full data so far for 2026, but I guarantee you it'll be far over 3 trillion. So it'll more than double in 2025. And it was only 647 billion in 2023. Again, trillions are being traded on perps. It's wild. Now, what's also interesting is if you look at the blue, these are less than $10 trades, perp trades. People throw $10 at a meme stock and go 100x long or short. It's wild, and they can make $1,000 in minutes if they're on the right side of the trade. This is what's incredible. And now, for the first time ever, with the chain like Solana, you can do it. You can't do this on Ethereum for low dollar amounts. Like, you got to be trading maybe tens of thousands to make it worthwhile in Ethereum. But with Solana, you can trade $10 in a perp and you're good to go. But you can see here, the blue is growing. Okay, the retail share of these perp traders is wild. And again, it's not just whales moving in size. Hype is whales moving $5 million, $10 million trades. But now the DEXs see 12 billion trades a month. And that's up from just under 1 billion in 2 years. It's gone 12x in less than 24 months. Completely crazy. And the majority of trades now, perp trades, are less than $100. And we still have a large amount of $10,000 plus, even $1 million ones, but it's still small. So yes, perps are taking off, as you can see. Also, Sol now drives all activity. Back in the old days, if we go back to 2019, 2020, it was all Ethereum. The majority of perp stuff was ETH pair, ETH USDC. Now, all of a sudden, ever since Q4 2023, Sol USDC is the biggest pair, and ETH is just shrinking away because it's cheaper and faster and better to perp trade on a Solana DEX. And that's just reality. No offense to anybody out there who finds that offensive. That's just, you can see here in the chart yourself. And there are some things I do want to warn people about. If you ever perp trade, never perp trade with more than 1% of your bag, okay? Because if you do high leverage perp trading like a 10x, 20x, 50x, 100x, you will blow up your bag. It's a given. The market makers will hunt you and cut your throat. So I say that with a lot of conviction. If you perp trade, have a process, have a system, and use very, very, very low liquidity. 84% of retail crypto traders lose money within their first year. And I guarantee you, if you take just the retail perp traders, it's probably like 90% or more. All right. Do not use high leverage. We have many days out there in the markets where $1.5 billion is wiped out in a single day, whether long or short. Okay. These $1.5 billion of losses come from these people. These people spending less than $10,000 or $1,000 or $100 or whatever. These are the people that get wiped out and destroyed. And if you wipe your bag, it's hard to rebuild. So again, never more than 1%. Always follow the rules. I've got all these risk management rules in place for a reason, everybody. The other reason they're so attractive is fees are very low or non-existent. There's no KYC. You can do it on your phone in a second while you're waiting in line at a coffee shop, which I've done before. Don't go to coffee shops anymore, though. But very low barriers to entry. That's why it's happening. Now, back to your question. Perps, when they're used properly, help pros manage risk. If I'm going to hedge my Bitcoin bag, I will use a perp to do so. I will not be buying options because they're too expensive. However, but the untrained retail person with perps will get wrecked. Okay? Now, your question was, will this reduce the volatility? No. It increases the volatility because market makers hunt the perp traders, okay? First of all. And second of all, no. It will not change the world. But more people will trade perps as they go forward, and the market makers will need to bag spot to hedge their risk as well. So it's a whole ecosystem that helps each other. But no, it will only drive increased volatility. It will not reduce it, in my humble opinion. So to expect, hopefully we get a wild Q4. I'm looking forward to that. Next question is from White Chris. I just want to say thank you for all the data knowledge you and the team share every day. I'm 26 and wondering what my age group's long-term outlook should be in terms of investing. I see often you give advice to people ready to retire, already retired with a large portfolio. As someone who is in the early stages of this journey, what is the right mindset attitude to have long-term? I currently have a 4-unit rental property, a small self-storage facility, along with my long-term Roth IRA and my crypto bags, which I've been building since 2020. Wow. So you started 21. Mad. And even with these assets, I get the feeling of not doing enough investing. And sometimes I get worried about my future. Well, there's a couple of things, White Chris, I do want to say. You are way light years ahead of your peer group. Okay. You got to compare yourself to your peers. Okay. You started 21. You got in all the right things. You got a fourplex, multi-unit property, and a storage facility. Most people don't buy real estate until they're now nearly 56 is the average age of a buyer buying real estate in the US. So you are light years ahead, my friend. You got nothing to worry about. But I will share a couple of things. I'll stress this again. Your competition is your age group, okay? Aim to be in the top 1%. I can already tell you are in the top 1% of your age group if you have a fourplex. I don't care where it is on the planet. And it's you versus them, okay? And this is what people sometimes really kind of don't get. It's like a zero-sum game. It's you. You're not competing against the 75-year-old person that got into the stock market 55 years ago. You're competing against 25 and 30-year-olds, okay? And once you are ahead of them, you're already way ahead of, you're miles down the road in the marathon. In fact, most of them haven't even started the marathon, and you're like at mile 23 is what I would categorize you as. And that's your edge. Your time in the market is your edge. And the more your edge grows, the more you can take on more risk and the more you can pull ahead from everybody else. So you're going to be doing incredibly well. And the other thing to think about too is time. You have so much time to spend in the market. I shared this in a video the other day regarding the best stock ever. Best stock ever, considering time in the market, is Tesla with a CAGR of 48.53%. And the best CAGRs are yet to come. Wild to think of that. I hope people understand that video. It's probably one of the most important videos I've ever made. NVIDIA is number 2, 40.62% CAGR, but it's been around for 26 years. But can you imagine just being in something like, I don't know, a Walmart, okay, for 55 years, and you make 3.8 million% on your gains? This is the power of time. And there is no boomer out there that would not trade positions with you in a heartbeat right now today, because you got time and you got youth as well. There's also one other cool thing that's very important to know too. It sounds like, I guarantee you already do this. And shout out to JWAS for this brilliant chart. And it talks about kind of how wealth is not created in a vacuum. It's very much a relative game. It's not about having more money. It's about where you stand compared to everybody else. And even if the whole world gets richer, if you fall behind in the rankings, you're effectively poorer. But at the top, it's a competition. And people higher up the ladder grab most opportunities, assets, and freedom. You are already very high up the ladder, my friend. Your job is to keep climbing and protect your spot. Don't blow up your accounts. You know, you've made it, all right? But the key thing here is, when you are young, don't blow all your money on memories and vacations and stuff. Do that later. As JWAS says, have 5 years of pain, live frugally. You see these pictures on X of Bitcoiners or Tesla shareholders with just a mattress on the floor and a laptop and a thing of ramen noodles. They go through the pain for 5 years so they can stack a bag, and then you get to this time in the market and your bag explodes, and it continues to explode. All right. If you're in Tesla 5 years ago, and every time it goes up, like, well, I think it went up $17 yesterday or Friday. On your basis, you're from the Leafs I was buying in 2017 and 2019 and 2020, you're making hundreds of % on your original investment. Okay. Only 5 years later. That's what you need to understand. You got time in the market. And the other thing is as well, that I do want to stress for all the young people out there watching, if you're watching this channel, you're already ahead. You're already up the ladder. Remember, when you start young, you've got time on your side. Time. Think of money or any share you buy or Bitcoin you buy or whatever as seeds. If you plant them early, they grow into huge trees, and they'll give you all the shade and fruit you need later. Again, going back to JWAS, this is so important. Take the pain for the 50 years of gain or freedom or whatever you want to call it down the line. Also, protect your position. If you have made it, okay, once you're up the ladder, don't start dancing around the top rung and fall off and break your neck. Start getting into safer assets. You're doing that with real estate, with fourplexes, perpetual revenue. Yeah, real estate may not be the sexiest, may not be the fastest horse, but it's safe. Okay, you're not going to blow up your real estate, but you could blow up a margin account or blow up a perp account. And that's so important. So again, keep the foot on the gas. You're in an excellent position. And that is my advice to every young person out there. Okay, very important. Think of it. You against them, not you against the boomers. All right. AEX1, thanks for all your wisdom you share. It's been game-changing for me so far. And this ties into the previous question too. So far, I've built long-term bags and used IDSS to time the purchases of leaps and synthetic longs during big opportunities. AEX gets it. He understands TA. And that is going back to the very first question. In my jurisdiction, though, I can only compound gains tax-free if I avoid options and leverage. Otherwise, all portfolio capital gains get taxed at 35%. And that basically leaves me with two strategies: rotation model, tax-free, no leverage, or leaps, synthetic longs, leverage, but taxed heavily. Do you think the rotation model can realistically keep up with an options-based strategy over the long run? And would you sacrifice options and leverage to have a tax-free account? So I'm going to touch on so many important things because people get tripped up on this all the time. And it's a mistake to think about. But this also, these 4 points are going to be very important. And by the way, when you are in retirement accounts, yes, tax-free sounds sexy. But if I didn't have my options to hedge my assets and do covered calls and everything else, I wouldn't be where I am today. It's a very, very important part of what I am. Yes, you can make it on rotation model, but rotation model is a different kettle of fish. We'll get to that in a second. First of all, focus should be on building wealth. Taxes are part of winning. You never go broke paying taxes. Said this 1,000 times. The goal is to maximize after-tax returns and not avoid taxes entirely. If you can get into a position, an options position, for example, and easily do a 10x or a 20x, okay, versus holding the stock where you do a 1x or 2x, don't worry about paying 30% or 35%. Okay, you're way up. You're way up. So consider the cost of doing business. Also, build wealth, rotation in a tax-free account. That's the rotation model. But do this with about 20% of your portfolio and be patient and pick the winning assets over the next 2 years. Absolutely critical. And these tax advantage accounts can help you build a much larger bag. So yes, you've seen how hodling you maybe get a 2x, how rotating you get 10x, 20x. That's how that works too. And there's no drag on it. But the key is what people get tripped up on. They think if they buy a leap and the leap is profitable, they sell the leap. Yes, when you sell the leap, you pay taxes. If you buy the leap and convert the leap to stock, and then you hold the stock, all the Tesla stock I got for my 2017 leaps, never sold them. I've never paid any taxes on them. But that's a big mattress that I sell puts against now today. Okay, I want people to understand this. It's so important. So you do not pay taxes until you sell. And when you're building winning assets, don't ever think about selling. You don't need to sell. Let's go back to what happens when you don't sell. I think it's slide 28. Look at these returns when you don't sell. Okay. In some cases, millions of percent. Absolutely wild. So let me go back to, where was I? Juggling here. All right, this one. So again, don't think about that too. And that's why I never thought I would need money at 65, so I never did retirement accounts. That's just me, though. That's my own personal thing. Again, my goals are not your goals. And remember as well, if you have a big bag of Tesla, okay, this is the magical part. You can buy, borrow, die. You never have to sell anything. You think Larry Ellison or Elon Musk or those guys, you think they sell their stock to live? No, they borrow against it and buy more stuff or invest more. And it doesn't trigger capital gains. And you get your cash flow to live. And you can write off the interest, depending on your jurisdiction. I'm not a global tax accountant or a tax accountant, but that is how the rich get richer. So remember, when I buy a leap in an asset, it's to convert that to stock and then ultimately sell some of that stock if I need to rotate into a faster asset. That's my whole game. Next is caffeine free. Sometimes when certain alt projects spike, you mention that every dog has its day. Yes, and I love dogs. So sometimes it's an old saying from the past. I hope people don't get offended. But if we have alts in our portfolio that we're looking to sell, are these spikes the best time to do so? Or should we wait until we're deeper into the bull? Very good question. Here's an example of two. 350, 370 XRP spike that happened earlier this year. I made a tweet about it. I said, that is the perfect time to sell because my confidence model says so. And it's most probably a top. You know, the XRP, I just checked the daily active users, 18,000 daily active users in the last 24 hours. And it's the market cap is monstrous. It's just the most ridiculous thing I've ever seen. Doesn't make any sense. Doesn't make any sense at all. And people are holding out, XRP and Ripple, they're going to build CBDCs for Europe and all this type of stuff. Yeah, you think if they do that, you think you're going to benefit as an XRP holder? No, the Ripple Corporation gets the money, not you. Now, Cardano shot above $3. Sadly, that was in 2021. That's another example of a spike where you sell. You see these crazy spikes. That's when you get out. Boom, gone. Will Cardano see $3 again? Probably not. Anyway, moving on. From Clate90. Hey, James, unique question for you. I really want to stake more Solana natively, but that means I need to use wallets like Phantom. Problem is, I'm scared to lose my phone or that someone will break into my house, steal the seed phrase. I was first thinking about writing a story using all words of my seed phrase, then map the position of the words in the story, then mapping I'll save on cloud storage account 1, and the story I will store in a separate cloud storage account 2. Is this a good idea, or do you have any other creative and secure ways to protect seed phrases? Well, first of all, this is a tricky one, and we have one of our wallet security experts answer this for you. First of all, be careful of cloud breaches. They can happen, okay? And we are very glad you're thinking about security and being paranoid. Always be paranoid. One of the key rules of life. Only the paranoid survive. But it's the right mindset. But let's look at this. When considering things like cloud storage, you have to consider the risks inherent in cloud storage. One, if the biggest is that they are common, the biggest risk is they are common targets of breaches out there. And that means your stuff, your sensitive information could be there. Could they reverse engineer it from your story? I'm not sure. Maybe with AI they could. I don't know, but we'll see. Second, the other risk is data loss and or the cloud service going down. And it's apparently quite common. In your case, if one of the providers goes down or lose your data, you won't be able to piece your seed back together again unless you've kept backups, which is more risk, more exposure as well. And finally, the risk of human error, your error. The biggest risk is often yourself. And over years, you might forget which cloud accounts you used, lose login credentials. Mistakes can happen like accidental deletion, make an update that goes wrong, or mess up the mapping schema from your code. This is a very high risk. So the advice that we give without giving out, well, security advice, yeah, we give that, is a couple of risk mitigation considerations. Based on the method you described, our security expert believes it's way too risky. Cloud storage can be secure, but if it comes with its own risk, if you're going to use for securing crypto, it's critical to understand the risks and figure out mitigation strategies. What you can do is on certain cold storage devices, I will not name any in case people will take that as advice, but you can stake from those as well. So you can keep the key secure. And I always recommend also having dedicated machines for different activities. Dedicated machine for perp trading, or multiple machines for perp trading, multiple hot wallets, etc. And the mitigation also could include client-side encryption, having backups, picking the right provider and their services, and most importantly, make it part of an overall security strategy instead of the only thing you rely on. Remember, when you have your OPSEC, your security is as strong as the weakest link. So make sure everything's buttoned up there. And finally, as well, some additional considerations. Do your own risk assessment on your own unique situation. If you're not moving millions around, I wouldn't be too paranoid about it. Don't worry if it's small. But again, spread it around. Dedicated machines, dedicated separate wallets, all that type of stuff. And there's no one size fits all. It all depends on how sophisticated you are from a technology perspective, etc. And remember, technical complexity is important. Don't over-engineer a solution that you're not equipped to handle. There are stories of like chief technology officers of software companies that lost their hard drive or their keys to their Bitcoin. There's a famous story of a guy here in San Francisco that did that. Wild. So again, keep it simple. Start with a hardware wallet. Many of them support Solana staking, like Keystone. Oops, didn't mean to mention that. And there's also others, you know them all. Also, 2/3 multi-sig is a good way to incorporate into your strategy. You can incorporate securing one piece of the multi-sig in cloud storage as part of your holistic strategy. Then consider another piece stored in a safe place, like a security box at a bank or at your mom's house or something like that, or a trusted family member, or putting it in a service like Unchained as well. So many options, but they would be what we recommend too. Thank you for that great question. I like the way you think. And helping animals this week, we donated to Diane Fossey Gorilla Fund to help support Jujuka. 2.5-year-old gorilla, loves to eat and swing in the trees. And they're so cute. So thank you all for that. And DCA tomorrow morning, as usual, with the gang. And I hope you all got smarter. I'm going to do some live questions right now. And hope everybody's well. We pull up the question. A big thank you to everybody supporting me behind the scenes. Everybody. Woohoo. Let me see. Doc Intern, what are your price targets end of year 2027 for Tesla and MicroStrategy? Ooh. Oh, that's a good one. Well, I did sneak in. Coincidentally, Doc Intern, you're so good at your questions. But based on the Tesla split, I think it is possible we get 2026 easy 650, 700, maybe 900. And then 2027, it could be in the thousands. Okay, that's for Tesla. Now, MicroStrategy, again, MicroStrategy is a function of two things. Bitcoin has gone through its second most quiet period in its history, okay, in years, ever, over the last 2 or 3 months. Volatility is vitality. And when there's no volatility in Bitcoin, there's no volatility in MicroStrategy. And when there's no volatility in MicroStrategy, there's no options trading in MicroStrategy. It's quiet. There's no volume. And it's not as exciting. We're going through that period right now. So the NAV premium tanks. So remember, MicroStrategy is a function of the Bitcoin price and the NAV premium. If we hit a bear market and Bitcoin goes down to 70,000, which was in my model earlier in this video as well. All right. And there's a very good chance of that. Year end 2027, that means if there's a bear market, it's going to hit next year and we'll be out of it year end 2027. So like my thought regarding MicroStrategy, because my cost basis is basically nothing. It's worth holding on to some. Excuse me. And just because sometimes you should hold on to your winners. I've sold things in the past. I had Leaps on Netflix years and years ago, and I calculated how much I would have made if I had actually kept them instead of selling them. Mad. So sometimes if you're in a winning asset, you may not know it, but sometimes it's good to hold on to. And that's my plan with MicroStrategy. Where MicroStrategy could go, I don't know. Depends on what Bitcoin does. In 2027, Bitcoin should be at 250K, maybe. And if that's the case, MicroStrategy, depending on dilution, could easily be $1,000. So we'll see where all this goes. Sir Winston, this song goes out to all the men and women in the community. Rush, Working Man. James, thank you for helping us to avoid living the lyrics of our lives. James, thank you for being our Sherpa on the mountain to financial freedom. We love you. Love you too, Sir Winston. You're amazing. And Doc Intern too. From Doc Intern again to the IFM, take a moment, count your blessings, donate something today. Yes, help your communities. And yeah, I'm just an average guy. Anybody can step up and do this. And we're trying to bring new people to the fold, new guests on DCA, like Tom and Mobbots and Jacob and others. So there's a lot of good people out there that are trying to help make the world a better place too. And that's part of my mission, is to incentivize others to get out there and do it. Work your butt off, do it, get it done. Never take a day off, okay? Skipping Stones, I'm curious if the number of whole coiners is going to go up or down. Thank you so much. The number of whole coiners is going to go down, and it has been. I'm actually working on a new model, and I had, between 420,000 whole coiners in the world down to 330,000, up to 350,000. They were my numbers over the last 5 years. But every time Michael Saylor goes out and buys 1,000 Bitcoin, he denies 1,000 whole coiners. Okay, so think of it like that. And it's not just him; it's all the treasuries, it's all the ETFs. Yes, you can have a whole coin through a proxy like BlackRock. Shout out to Larry Fink, and hope his gig at the WF is going well. Or you could have it on your cold storage wallet or somewhere else like Fidelity and Custody. I don't know, wherever you want. Or you could have it through iBit or MicroStrategy or whatever. There's many ways of having a whole coiner, but having the pure form whole coin is going to become harder and harder, and there's going to become less and less of them. I reckon, based on some of the provisional numbers I'm looking at, is closer to 300,000 whole coiners. And people say that's impossible. There's 8 billion people in the world. It's no. Just look at the concentration. Look at all the sharks and how much they've bought lately. It's wild. So yeah, number of whole coiners will continue to go down. That's why since 2017, I've been urging people to get one and hold on to it. Like the guy, whatever his name is, the NRA guy. You pry this from my cold dead hands, or whatever he said. Anyway, I'm not a proponent of guns or weapons. It's just a saying, everybody. So anyway, IZ55. If you're a 70 with decent bags, solid Bitcoin, MicroStrategy, Tesla, where would you rotate into for protection? I just move into, if you had decent bags and you just wanted cash flow. I was actually talking to somebody about this yesterday. Believe it or not, you start moving to safer things, revenue generating assets. Multi-unit properties are a pain to manage, but they can be very good if you got somebody to manage them for you. Other things you can consider is JLP. You can get some good yield on stable coins if you're happy with 5 or 6%. You can get creative with DeFi as well. Many things you could do. You got Stretch and Stride and Stark and Strife from MicroStrategy, all pay between 8 and 10%. I think if I imagine you had $10 million or $1 million, you take 10%, you put it in one of these MicroStrategy vehicles and see if you can live off that, and then maybe buy some franchise with a family member that would generate some perpetual income. Do some of that, maybe some JLP, do some, mix it around. Don't have all your eggs in one basket as always. And that would be your rotation for protection. And also, if we do see the signs that we're at the top of a crypto bull market top, blow off top, take some profits, okay? Don't be sitting on MicroStrategy through the bear. Hedge it or take some profits. Same thing with Bitcoin, same thing maybe with Solana. Tesla, however, is going to do very well over the next 3 years. Fingers crossed, unless something terrible would happen. And thank you for your super stick as well. Psych Experience, Mortello 45, Forest, Buckhorn, B-Man, DBF 430, KT, Anglo Blackson, Dog One, and Adam Q. I appreciate you. I appreciate the mods in the chat too. Oh, look at that. Bitcoin is about to hit 111,000. We're coming back, my friends. That's exciting. Let me see what else is anything else popping out there. Let me see. Hype was I was in the toilet the other day and that's shot up to 47. Sol 207, that was at 190 the other day. Yeah, everything's coming back, everything's alive. Woohoo. So it's a good day. Sunday pump day. Tomorrow's Monday, and then we go into the dreaded week. Remember, this September will be over real soon. Thank you all for coming, my friends. Appreciate you. And thank you to the mods in chat. TND Tesla, K8, Sean Donnelly. See you all tomorrow. Good night.